Okay, so if you haven't looked at the stock market tickers since Thursday morning, January 29th, 2026, you might want to sit down.
Or maybe stand up and cheer. Depends on what's in your portfolio, I guess.
Right. We are talking about Southwest Airlines, ticker LUV,
hmm
and Wall Street is showing them a lot of love right now.
The stock didn't just go up a little bit, it skyrocketed, nearly 20% in extended trading.
It's a massive move. And,
Mhm.
usually when you see a legacy carrier jump like that, it's something external.
Like a merger rumor or,
Yeah.
yeah.
Or oil prices crash, or a competitor goes bust, something like that. But this
Yeah.
was completely different. It's all internal,
Mm,
self-inflicted, but in like the best way possible.
exactly. It's not just that they had a solid Q4 in 2025, and we will get to that. The numbers are pretty fascinating. It feels like we're witnessing a fundamental identity shift.
Hmm.
The era of open seating, the cattle call, the anxiety of lining up,
Checking in at exactly 24 hours beforehand.
that's officially dead. And it looks like a new and much more profitable business model has just taken flight. That really is the heart of it. We're looking at one of the most, I think, aggressive business transformations in aviation history. I mean, think about it. They took this volume-based model,
Get as many butts in seats as possible.
right, treat every seat the same, and they just flipped it almost overnight into a premium choice model. And the big question for us today is how on earth did they pull this off without the whole operation just breaking?
Oh, absolutely. Because usually when an airline even touches its IT stack, you hear about meltdowns, lost bags, people sleeping on the floor. But the early reports here are, well, they're surprisingly different.
Very different.
So our mission for this deep dive is to unpack that Q4 2025 earnings call, look at the guidance that really did shock Wall Street, and try to figure out what this means for the future of air travel.
And for you, the listener, I mean, whether you're a frequent flyer or just watching the market, this is a masterclass in a corporate pivot. It's about reading the room or, the cabin and realizing that what worked for 50 years, it wasn't going to work for the next 5.
So let's dive into the numbers, because shocked Wall Street might be an understatement. You've been digging into the guidance they put out. What is the single headline number that just has everyone's jaw on the floor?
Okay, so it's the earnings per share, the EPS guidance for the full year of 2026. But to give you some context, let's look at where they just came from. For all of 2025, Southwest's adjusted EPS was 93 cents.
Okay, so less than a buck. I mean, they're profitable, which is obviously better than losing money, but 93 cents isn't exactly setting the world on fire for an airline that big.
Precisely. It was respectable, nothing to write home about. Now, fast forward to their projection for 2026. They are guiding for an adjusted EPS of at least $4.
Whoa, hang on, let me just do the math on that. That's over a 300% increase year over year.
It's a massive, massive step up. You're talking about quadrupling profitability in 12 months. That right there is what drove that 20% stock jump. Investors suddenly see a company that's projecting to be a cash machine again.
And their most recent quarter was strong too, right? This isn't coming from nothing.
No, the foundation was there. Q4 2025, they hit record operating revenues of $7.4 billion. Net income was $323 million.
And I saw they beat their EBIT guidance. That's earnings before interest and taxes.
Right. Their EBIT for the full year came in at $574 million, and they had guided for $500 million. So the engine was already revving. They had momentum even before this.
I want to go back to that $4 number, though. You said at least. That phrasing feels specific. Usually, companies give a range, don't they? Like, we expect between 4 and 450.
This is where it gets really fascinating, and frankly a little bit strategic on their part. CEO Bob Jordan and CFO Tom Doxey were very clear on the call. That $4, that is the lower end of their internal forecast.
The lower end.
The lower end. They explicitly said they are not ready to give an upper range yet.
But why? If things are so great, why not shout about the ceiling?
Because the data is just too new. Remember, the actual product launch, the new assigned seating, the extra legroom, that only happened on Tuesday, January 27th.
So 2 days. 2 days before the earnings call.
Exactly. They have booking data and it looks great, but they don't have enough real-world data on things like close-in bookings, the last-minute business travelers who pay top dollar, and they don't really know what the gate upsell is going to generate yet.
I get it. So they're playing it cool. They're saying, look, we know we'll make at least $4 based on what we see now, but if this premium thing really works, it could be a lot higher.
Exactly right. It's the classic under-promise, over-deliver setup, and they're backing it all up with cash. In 2025, they did $2.6 billion in share buybacks.
That's huge. That's what, like 14% of their outstanding shares?
Yeah. Plus almost $400 million in dividends.
So shrink the share count while projecting earnings to explode. That's a recipe for a stock pop. But let's talk about how they're actually doing this. Because you can't just wish for higher earnings. You have to change the product. And they literally did it overnight.
Tuesday, January 27, 2026, that was the day. The COO, Andrew Watterson, he said on the call that overnight they operated more than 3,200 flights as, and this is a quote, a different airline.
That sounds terrifying from an ops standpoint. Just, welcome to work, everyone. Everything you knew about boarding is wrong. Good luck.
It does, doesn't it? But let's look at what actually changed for the customer. The big one, of course, is the end of the cattle call. Assigned seating is live.
Finally.
But it's more than that. They introduced extra legroom, ELR, real premium section. They implemented bag fees, which for Southwest, the bags fly free airline, that's massive.
Right.
And they added a basic economy fare to compete on the low end.
It's a full spectrum offering now. You can go cheap or you can pay up. But I'm still stuck on the logistics. How do you retrofit over 800 airplanes to have a premium section without grounding half your fleet for months?
This is where their tech ops team they really earned their keep. They managed to retrofit planes incredibly quickly. And here's a detail I loved. They were so efficient at it that they actually delayed the 700 retrofits until January on purpose.
Why would you delay it? Wouldn't you want the new product out everywhere as fast as possible?
To squeeze out more holiday revenue. See, that specific retrofit on the 700s, it involves removing a whole row of seats to create the extra legroom. If they'd done that before Christmas, they'd have had fewer seats to sell during the busiest time of the year. So they waited until January, the slow season, maximized the holiday cash, then did the work when demand was lower.
It's incredibly savvy. It's not just rushing. It's calculating the cost of every single seat, every single day. And the tech held up. The website, the app.
Flawlessly, according to them. All the tech development, all the employee training, done on schedule. And, it's only been a few days, but they're reporting positive sentiment and a seamless implementation.
Which is pretty surprising, right?
Yeah.
Because usually big changes mean big chaos. But you found something that kind of contradicts that narrative. They actually got a huge accolade recently.
They did. And this might shock anyone who still remembers their big operational meltdown from a few winters back.
Yeah.
Southwest was just ranked the #1 U.S. airline of 2025 by the Wall Street Journal.
#1. While they were in the middle of basically tearing up their entire business model from the inside out.
It's totally counterintuitive. But in the fourth quarter, they hit #1 in on-time performance and completion factor. They had the fewest extreme delays in December. So while they were planning this enormous pivot, they were actually running the best operation in the country.
Well, that explains the confidence. You can't start charging a premium if your planes are always 2 hours late.
Exactly. And it wasn't just about being on time. It was about flying smarter. They introduced red-eye flights, for example.
The overnight flights, right.
Yeah.
Which was always this weird hole in their schedule.
Right. And doing that, it increases aircraft utilization. The plane is making money while we sleep instead of just sitting there. It's essentially free capacity. They also somehow reduced their turn times.
The time it takes to unload and reload the plane.
Yeah.
How is that even possible? I mean, assigned seating has to be slower than the open seating free-for-all. Open seating was chaos, but it was fast chaos.
It was. But they've optimized the new boarding process with technology. And they also made a huge financial shift, discontinuing their fuel hedging program. But we have to be honest, this transformation wasn't painless.
Right.
They did beat their cost-cutting target of $370 million, but that included a really difficult milestone.
You're talking about the layoffs.
Yes. For the first time in the company's entire history, they had layoffs of non-contract and management employees.
That is a heavy moment.
Yeah.
For a company that built its entire brand on culture, on LUV, that has to sting. Which I think brings us to the heart argument. I'm sure a lot of longtime flyers and probably employees are asking, is this even Southwest anymore? If you get rid of open seating, if you charge for bags, if you have layoffs, aren't you just another legacy carrier that happens to be painted blue?
It's the core question. And CEO Bob Jordan, he addressed it head on. You have to remember, this guy's been there for 38 years. He said every single time they've made a major change, adding Wi-Fi, whatever, people have said, you're not the same Southwest.
So what's his defense?
His defense is that the heart and soul isn't a boarding policy, it's the employees. He argues their service delivery, the culture of the flight attendants, and the gate agents, that is the uncopyable competitive advantage.
So the argument is, we can have the same basic business model as Delta, but we'll win because our people are nicer and our operation is more reliable.
Essentially, yeah. They want to be the nice premium airline. They believe they can layer that premium economic model right on top of a hospitality-first culture.
Let's dig into that economic model because, just assigning seats doesn't magically make you 300% more profitable. There's a deeper strategy shift here in how they manage revenue.
There is. This gets a little technical, but it's absolutely crucial. For years, Southwest, like a lot of airlines, was obsessed with load factor.
How full the plane is.
Exactly. Is the plane 90% full? Great. 70% full? Bad. They are actively moving away from that as their primary metric.
So what are they looking at instead?
They're managing for something called the RASM-CASM spread.
Okay, break that down for me. BASM-CASM.
Right. It's revenue per available seat mile minus cost per available seat mile. In simple terms, it's about the profitability of each seat, not just whether it's filled.
So what does that mean in practice?
It means they are perfectly willing to fly a plane with more empty seats if the people who are on that plane paid a much higher price. They said it on the call in Q4. They accepted a lower load factor to maximize earnings. They called it unflattering to the metric, but the right decision for profit.
So they'd rather fly 100 people paying $300 than 140 people paying 150.
That's the new math. And who are those people paying $300?
The business traveler.
It's always the business traveler. That's the holy grail. Southwest basically admitted corporate travel managers hated open seating. If you're flying to a meeting, you can't be lining up 30 minutes early hoping you don't get a middle seat.
You want to book seat 4C? Show up 5 minutes before the door closes and get your work done.
Precisely. And the data is already showing it's working. Corporate bookings are up mid-single digits, but they think this new product unlocks massive growth. Right now, they're ranked number 2 in the Business Travel News rankings, just behind Delta. They believe assigned seating closes that gap.
And there was that psychological bit about upselling that I thought was brilliant, the gate upsell.
Yes. This is basically monetizing human nature. Picture it. You're at the gate, you see it's a totally packed flight. You're holding a basic economy ticket, maybe you've been assigned a middle seat in the back. The anxiety kicks in.
The dread.
The dread. And Southwest is banking that in that exact moment, a lot of people will gladly pay to upgrade their seat right there on the spot just to avoid the uncertainty.
It's the panic buy.
Yeah.
Or maybe the comfort buy.
Exactly. They expect to shift from having like 80% of people buying the cheapest fare down to about 50%. They want that other half of the plane to buy up to premium or at least pay for some extras.
That is a huge shift in customer behavior. You're asking almost a third of your customer base to voluntarily pay you more money than they're used to.
But their bet is that the customer wants to, that they were willing to pay for a better experience all along, and Southwest just wasn't giving them the option. And that really brings us to the why. Why do all this now? Bob Jordan's phrase was, chasing our customer.
Which implies the customer was running away.
Or just evolving. His point was that over the last 5 or 10 years, preferences have changed. People want premium options. And if Southwest didn't offer them, those customers were just defecting to United or Delta to get them. They had to modernize to stop the bleeding of their highest value passenger.
Okay, but this can't be without risk. I mean, we've painted a pretty rosy picture so far, but what could go wrong here?
Well, costs are the immediate pressure. Their CSMX, that's cost per seat, excluding fuel, it's projected to be up about 3.5% in the first quarter of 2026. Part of that is just simple math. When you take out seats to create an extra legroom section.
You have fewer seats to spread your costs across. You're shrinking the inventory.
Exactly. They're also spending a ton of money. Capital expenditure is forecast to be between $3 and $3.5 billion this year. They're taking delivery of 66 new Boeing jets and retiring 60 older planes. That is a lot of new metal coming in.
And even though the launch went smoothly, they admitted they're still flying a bit blind on the most important data, right?
That's the execution risk. They are still waiting on that real-world, close-in booking data. If the high-paying business travelers don't actually show up in the last week before a flight and buy those expensive tickets, then that $4 EPS guidance could be in trouble. They absolutely need the revenue upside to cover the cost increases.
So if we zoom out here, Southwest has basically pulled off a complete 180. They've gone from a single-class bus-style service to a segmented, premium-capable airline.
And they're projecting an earnings explosion because of it.
while being ranked #1 in operations and keeping their investment-grade financial health.
It's a really impressive scorecard. But like management said on the call, there's no victory lap yet.
Which I think leads us to the big final thought for you, the listener. Southwest proved this week they can operationally execute a new business model. They changed the seats, the software, the boarding process. They nailed the mechanics.
But the cultural question is the one that's still out there. Can you really hold on to the loyalty of the budget traveler, the person who loved you because you were simple and cheap, while you're actively chasing the premium business traveler?
Right. Is it possible to be everything to everyone in the airline industry? Or will this premiumization eventually alienate the very base that built you? If I'm that budget flyer and I see a premium section, even if it's just a few rows, do I start looking at Spirit or Frontier instead?
It's the classic dilemma when you move up market. You might get better margins, but you risk losing your soul, or at least your original audience.
Management said to watch the stock over the next month or two because that's when they'll release the upper end of their guidance. That's going to be the real tell.
I will definitely be watching.
Thanks for listening to this deep dive into Southwest's transformation. Fly safe, and we'll catch you on the next one.